We recently compiled a list of the 10 hot growth stocks to invest in according to analysts. In this article, we are going to take a look at where Tesla Incorporated, Nasdaq (TSLA), stands against the other hot growth stocks. The big rally in the broader stock market might have ceased, but there are a lot of things to focus on under the surface, says Morningstar. Notably, technology stocks, which were the leading contributors to the big bull market in 2023 and 2024, have seen strong declines in 2025. Elsewhere, other sectors including financial services, basic materials, and healthcare continue to see new investor interest. Morningstar, while highlighting the comment from Michael Aron, chief investment strategist at State Street Global Advisors, mentioned that non-US markets including China, the UK, and Germany have seen strong rallies. Notably, the market strategists continue to see a subtle transition in leadership. The broader markets have been struggling to find focus due to the uncertainties related to the future. The US Fed rate cuts are not guaranteed this year, while inflation remains sticky. Also, the potential impact of Trump's economic policy proposals is unknown yet. Is a market rotation on the horizon? To provide a brief perspective, when a rotation occurs, the market investors tend to shift their focus from stocks that were critical to a strong trend to other parts of the broader equity market that have not seen much movement. Morningstar believes that there is plenty of evidence that a rotation is underway. Technology stocks, which have seen an increase of over 36% in 2024, are down in 2025. The Nasdaq 100 technology sector has seen a decline of 0.74% on a YTD basis. The basic materials sector was the worst performing sector in 2024. However, so far in 2025, related stocks have managed to deliver decent gains. Dow Jones U.S. Basic Materials Index increased by over 6% on the YTD basis. Also, healthcare stocks have grabbed investors' attention after they returned 2.7% in 2024, says Morningstar. Dow Jones U.S. Healthcare Index returned over 7% on a YTD basis. As per Dan Kemp, Morningstar Chief Research and Investment Officer, there seems to be a rotation in terms of valuations. Read also, 7 best stocks to buy for long-term and 8 cheap Jim Cramer stocks to invest in. UBS remains optimistic about S&P 500 in 2025 despite challenges. UBS has reiterated the importance of portfolio diversification and hedging in a bid to navigate the market volatility moving forward. Investors are required to consider capital preservation strategies so that they can limit the portfolio losses. Investors looking to build up long-term AI exposure can use structured strategies or buy the dip strategy in certain quality AI stocks. Shares of the electric car maker Tesla, Nasdaq TSLA, continued its struggles to open the week of trading, falling roughly 8.3% as of 10:17 a.m. Eastern Time today after a Wall Street analyst lowered his price target on the analyst Joseph Spack cut his price target on Tesla by $34 to $225. And shares of Tesla traded around $240, as of this writing. The analyst lowered his first quarter delivery estimates on the company from 437,000 to 367,000, citing lower demand among Tesla's Model 3 and Model Y in select markets. The 367,000 delivery estimate implies a 26% quarterly drop in deliveries and a 5% decline year-over-year. Spack's lower delivery estimate also implies that the company's gross margin in its auto business will decline by 330 basis points from the previous quarter to 10.3%, excluding credits. That would also be down from 16.4% in the first quarter of 2024. This isn't the first time analysts have raised concerns about Tesla's first quarter struggles. Many have cited a significant slump in sales in Europe in January, a period where the overall electric vehicle (EV) market has supposedly been on the rise. Tesla's sales have also apparently struggled significantly in China, according to data from the China Passenger Car Association (CPCA) last week. What goes up usually comes down. After a massive surge for the stock following President Donald Trump's election win in early November, Tesla has now retraced and given up all those gains. In my view, the stock simply ran too far too fast, with investors buying hope over clear catalysts. Now, with the market struggling, companies trading at rich multiples like Tesla are vulnerable. The stock still trades at about 85 times forward earnings, so I'm not buying the dip just yet. Don't miss this second chance at a potentially lucrative opportunity. Ever feel like you missed the boat in buying the most successful stocks? Then you'll want to hear this. On rare occasions, our expert team of analysts issues a double-down stock recommendation for companies that they think are about to pop. If you're worried you've already missed your chance to invest, now is the best time to buy before it's too late. And the numbers speak for themselves. Nvidia, if you invested $1,000 when we doubled down in 2009, you'd have $292,207, asterisk. Apple, if you invested $1,000 when we doubled down in 2008, you'd have $45,326, asterisk. Netflix, if you invested $1,000 when we doubled down in 2004, you'd have $485,668, asterisk.